All right. Well, welcome back to the Everything Real Estate Show, everybody. Today we have an awesome guest, Linden Crain from Amherstburg, and we're going to be covering a lot of things from the world of mortgages to municipal politics to running a podcast that's coming on 160 episodes and everything in between. We got advice for first-time homebuyers, have advice for investors, people looking to unlock the equity in their home, to buy an investment property, all that kind of stuff. So stay tuned, and I think you're going to enjoy this episode a lot. My name is Cody Kraus, and I'm a real estate broker owner that's obsessed with everything real estate. Investing, building, selling, developing, farming, you name it. I've been doing this since I was 18 years old, and I've learned a ton through trial and error, and I've met some of the coolest people ever. This is a show where I invite these people on to talk about their experiences and mine, plus everything else real estate. Let's go. Welcome back, everybody, to the Everything Real Estate Show. Today I have with me Linden Crain, and Linden Crain is a familiar name around Essex County, especially in the township of Amherstburg, where he's actually involved in politics there. But in addition to that, he's a mortgage broker, among other things. So I've already kind of stolen some of your thunder there. But for anybody that doesn't know you, Linden, who is Linden?
Yes, so that is I. I'm a counselor in Amherstburg, so I was elected in 2022.
Okay.
At the age of 22. And then shortly after, I went into the mortgage world. So I'm a level 2 mortgage agent. So what that does is allows me to lend in the private space and be lending. And I work for the super mortgage team with Joe Bondi and Ron Bondi.
Awesome. Cool. Anything you want to add to that? Do you want to tell us a little bit about yourself besides professional life?
I have a fiance, just got engaged a couple weeks ago.
Oh, congrats. Awesome.
Thank you. Yes, we have a wiener dog.
Okay.
Spend a lot of time at home, going for walks, going out for dinner. We love to just check out all the different restaurants in Windsor, Essex. There's so many great choices.
Yep.
So aside from that, love traveling. Want to travel more, especially while I'm young and don't have kids right now. So it'd be good to explore the world, right?
For sure. Cool. So obviously you're into politics at a very young age, at 22 years old. Mm-hmm. What was the reception to, I guess, running for your campaign? How did people accept it when you were elected? I guess curious for all the young people out there that are thinking about politics or business or whatever it is. Do you feel that your age maybe brought a benefit, or did it come with some challenges also when you're discussing with other people?
I think a little bit of both. But it requires like a lot of boots on the ground, door knocking. Yeah, that's really what wins. So
the campaign side.
The campaign's the most important part. By coming off positive at the door and not over promising what you're looking to achieve in the municipality, and having just a strong platform, good social media presence, and just good energy at the door, I think people are receptive to that. Yeah. When you're door knocking and you're focused on the negative and what needs to be cleaned up, I find it does steer some people away from voting for you. So I was positive at the door. I had a team of young people that were helping me, and we would just knock on doors from June to October. Yeah. I was in school at the time, so I'd knock on doors from like 1 to 8 o'clock before the sun set. Yep. And we just did that, and then the results came. We used a little bit of like paid advertising on social media. I tried to use that to my advantage to attract more young people, but I don't think my age worked against me. I think it allowed me to stand out. Yep. But also just being confident and positive at the door helps.
I say, so like, you could probably challenge it from one perspective and say, yeah, but does he have experience in politics? Mm-hmm. And I look at our federal election coming up right now. My complaint about everybody running in the federal election is that they've all been in politics for forever. I would prefer to probably see someone with a fresh face and maybe not as many bad habits to get rid of, right? So I can appreciate that when it comes to politics, when it comes to business, to any of that kind of stuff, it is kind of nice to have the balance of experience and, I guess, newfound energy and all that kind of stuff too. So I'm guessing that worked for you.
It has, and it's good being in municipal politics because it's a part-time role. Like you're on a very, very small salary. So a young person running for municipal government, you have to have a full-time job on top of that.
For sure. Yeah.
There's a lot of retirees that would enter a municipal role, whether it's councilor, deputy mayor, or mayor. So that's, I think, what's allowing me to stand out a little bit more is that I'm still establishing a career in the private space.
Yep.
And if I decide to move up in politics, I have I have experience in a career outside of
Yeah.
of being a politician, right?
And I don't think the town of Amherstburg probably has spectacular ways of tracking who voted for who, or
No.
there's no polling data throughout the election, right? But I can imagine that a lot of the younger people were probably like, yeah, it'd be great to have someone younger on there as a representation of who we are in the community, because your stereotypical politician, especially at a municipal level, might be someone,
It's a lot of retirees, right?
closer to their vintage.
Right?
Yeah.
Because it's tough to just rely on a council salary to raise a family.
Yeah.
You can't do it. Like
Yeah.
I would still have to be living at home in order to afford life.
Yeah. No, it makes sense. And so I started in my professional career very young, much like yourself. And now we have a lot of younger people coming into our company also. And so the big thing I try and encourage them is like, don't try and hide it. Like, accept it. It's obvious. It's the elephant in the room, right? You don't look like you're 45. You're not graying yet, right?
What?
And so it's clear there's no point in trying to make up for it. Accept it for what it is. There's pros that come with it. I got lots of energy. I'm going to work really hard. It's not just a job for me. It's my career.
Yes.
And obviously I'm very young in my career. So I'm going to make sure that I do a great job for you, because to get started, I'm going to need, referrals from my past clientele, which I don't have a ton of because I'm pretty early in this. So all that being said, there's going to be some things that I don't know, but I'm not going to play it off like I do know them. I'll tell you exactly what I know. And as I get more experienced, I understand that, obviously I'm going to have to soak up more and more and more and more. But I won't be too proud to go and get the advice when I need it to make sure that I give you the right answer. I'm not going to lie to you if I don't know it. But I found I was able to, I guess, offset the inexperience by just letting people know, hey, I'm going to work really hard and I'm going to go over the top so I can try and get your referral to springboard my future success also. Imagine something similar, or maybe I'm kind of setting you up for a knockout of the park here, but
Yeah. No, that was my experience as well, right? I started January of 2023, did not know a single thing about mortgages, but the second I got my license, I just started marketing myself, let the deals come in, and then I have a support system, Joe, Ron, people that have been in the business for 20, 30 years that I could lean on, right, if I had a question. So that's how I would approach it with people is, hey, yes, I'm very green, but I have this support system behind me. So if there's something I don't know, there's somebody at our team that does, and we're going to get this deal done together.
So in the professional space, obviously having a mentor, huge. How do you pull that over in the political world?
Political world's tough, but I would just lean on other people in politics that I knew. I remember before I ran, I don't know how many different coffee meetings with mayors, past mayors, current mayors, deputy mayors, councilors, just to understand what's it like.
Yep.
I worked for Drew Dilkins for a bit during university, so I saw firsthand what it's like to be,
Under the mayor of Windsor.
Yeah, so that opened my eyes to a lot, and then I helped out on a few. I helped out on a provincial campaign, so that taught me how to campaign properly. So it's about asking questions and not going into anything in life without being prepared, and it's okay to seek advice.
Yep.
Right? Not to act like a know-it-all, right?
One thing that's kind of interesting I find about municipal politics is there's no party affiliation.
That's the best part.
Right? So you go to provincial or federal levels or whatever, you're always associating with a party, or you have the option to run as an independent, which can work for or against you. But there is no parties when it comes to the municipal part of it, which is kind of nice because you get to be totally a free thinker, right?
Yeah.
You have your own opinion. You're not accountable to a leader or an oversight. There's oversight, and there's absolutely tons of oversight from the township that you're serving
residents,
within.
yes.
Yeah, and obviously you have a code of ethics and all that kind of stuff that you have to adhere to, and it's probably set out by the provinces and some kind of municipality act or something like that. But you don't necessarily have to come in with a prepositioned, like, how do I think they're going to vote on this? Like, it's more about which road are we going to fix this year? Like, what kind of budget do we allocate to the town park? Can we afford the splash pad this year? Or is that something we put 5 years out, right?
Yep.
Imagine it's more budgetary discussions than just about
It is.
anything compared to policy.
We have policy changes here and there, like updating our bylaws or restructuring any policies that we have for staff at the town. But like you had mentioned, that's what I love most about politics is that you're an independent thinker.
Yeah.
And I'm not having to go off of what the party wants me to say.
Yeah.
Or do or think.
Yeah.
Right.
I get to be
I,
Linden, and I get to be the person that they voted for.
Yes. Yeah. That's what's turning me away from a career in provincial or federal is in some cases, like you're doing things that you may not necessarily agree with or believe in.
Yeah.
Right.
When you're being told what to do by the party, right?
Yeah.
You got to toe the line.
Yep.
Yep. Not that you're doing that. That's
No,
why I
no,
added
no,
that.
for sure.
So two questions, and they're the same, but one for your professional career, one for political. Why did you want to get into politics? Why did you want to get into the mortgage world?
With politics, I was on the University of Windsor Senate, so I campaigned in university to be on the Senate, and then I chaired our student union board.
Okay.
So that gave me an insight into just helping bring a large group of people through like changes in their community. And in this case, it was the university.
Yeah.
And then when I worked at the city of Windsor, I just thought, you know what, why don't I have an impact on a municipal level? I was already on a few different boards, like the Chamber of Commerce in Amherstburg, the Community Foundation, and I wanted to take it a step further.
Yep.
I definitely did not go into politics for the money at all.
Come on, municipal counselor.
You do it because you want to have an impact. And for me, we were missing a younger voice. And I just wanted to bring a fresh perspective. I wanted to get the community more engaged online. And that way I can just share information more easily and let people know about all the great things Amherstburg has to offer. And really just be a brand ambassador for the town. That was my focus. With the mortgage industry, I just fell into it. Our broker, Joe Bondi, had approached me when I was in university, and I was thinking of going to law school. And he said, hey, why don't you skip being a lawyer, come be a mortgage agent?
Yeah.
And at the time, I barely knew him. I'm like, hey, I don't know anything about mortgages. I understand the world of law and how that may help me later in life. And I turned him down.
Yeah.
And then I got elected to council in 2022. I was actually in my MBA program at the time, was studying for my MBA. And then when I got elected, I'm like, you know what? I think I just want to go into the working world for a bit.
Yeah.
Because I did a business undergrad, and then I went into the MBA right away. And it was a lot of repeat of what I learned in my undergrad.
Yep.
So I reached back out to Joe. We had dinner and wrote the course and exam in like 2 weeks. And then I was a mortgage agent January 1st of 2023. So
Okay.
I wasn't the strongest with mathematics in university or high school,
Yeah.
but you don't need to be in this role.
I say our teachers growing up always told us you're never going to have a calculator that does all these things for you in your pocket anytime you need it. And it's like, well,
you do, yeah.
We kind of do now.
Yeah, there's some manual work we have to do on our end, absolutely.
Yep.
But it was more of the sales aspect that I liked.
Yep, for sure. Well, even when you're qualifying a lead on the phone, like obviously you need to know credit score, you need to know, how much debt they have and other things. But if someone wants a quick qualification, hey, Linden, if I have no other debt and I'm a 800 credit score and I make this much, you got to be able to think pretty quick and go, okay, you know what, you can afford $4,300 a month, gross debt payments or whatever, right?
Yep.
So I guess continuing on that vine, you're in your mid-20s now. You sell mortgages for a living, and we live in 2025 where most people are like, my children will never be able to afford a home ever. So this is probably, you're probably more qualified to talk to this than just about anybody, being a person that would finance that for young people. How are younger people able to buy homes this year, last year? Is it often with co-signers, or are a lot of them doing it on their own, or is there partnerships? Is it only couples? Like,
it's a lot of couples.
Yeah.
The average first-time home buyer on their own, if it's just a single person and they're making $50,000 a year, in Windsor, Essex, there's nothing we can do. They may be pre-approved for $200,000 purchase price, depending on what they're putting down and their debt load.
which there's almost none to pick from.
Yes, even condos, you got the condo fees, so that throws things out. So we're seeing a lot of couples, a lot of co-signers. So that's really what we're seeing is a couple. They're each making $50,000. They have no debt, 5% down. We'll do the 30-year AM, and they may get pre-approved for, let's call it $400,000. Right now, they're in the game a little bit, right?
Yeah. So you mentioned 30-year AM. So that wasn't a thing until this past December. There's been a few mortgage changes. It was actually by our outgoing federal government, right? So it was actually under
Right before the election, I think.
Yeah, Freeland did it when she was still involved in the federal party. So you want to maybe talk to a few of the changes that they announced and they made and how that's affecting people that are getting qualified right now?
Yeah, so the 30-year AM's been huge, I'll be honest. It's giving us like 30, 40 grand in buying power.
And so for people that don't know, before with an insured mortgage, so 20% or less down, you could only stretch your mortgage out over 25 years. Now
Correct.
they're looking at 30-year payments.
Now it's 30-year. Okay. So there's pros and cons to it.
Sure
the pro is it's getting somebody who's at 270 purchase price to 3 or 320.
Yeah.
Depending on their situation, everything changes.
Which can very well be the difference between getting a home and not getting a home.
Yeah. And then you can find something like that in Windsor. I'm not sure about like the Leamington area, but that's been huge. The only con is you're delaying, like you're extending your mortgage 5 years, so 5 more years of interest.
Yep.
And then when you're putting less than 20% down, there's an insurance premium that's added into the mortgage that's higher when you're doing a 30-year AM as a first-time buyer.
And there's no insurance premium if you can save up the 20% down, which is tough to do.
Yes.
But obviously that insurance premium gets smaller from 5% as you go towards that 19.
Yep. 0.99, yeah.
Yep. But also, like at the same time, part of the reason why they looked at the 30-year AM is because they still have the stress test in place, right?
Yes.
So a lot of people can afford the 25-year payment at today's interest rates. It's just they're being qualified at a much higher interest rate. And then as long as they properly understand the mortgage that they're signing with their broker or their mortgage specialist or whoever, oftentimes there's provisions where as long as they can make a bigger payment, they can put down a certain extra percentage per month or on an annual basis with a lump sum and things like that too, right?
Yes. Yeah.
Okay.
So there's pros to it, but and as a first-time home buyer, when I bought my house, I didn't have the 30-year AM available. I wish I did, because for me, I'm just looking at it as I want to cash flow more per month.
Yep.
I'm not really looking at it as I want to pay down my mortgage as fast as possible. And I don't think most first-time home buyers are looking at it that way. Versus when you look 10, 20 years ago, the goal was, okay, let's do accelerated weekly payments.
Get it paid down as
Let's
quick
get
as
it
we
paid
can.
down. Now you have a $500,000 mortgage. You know it's going to take, yes, it takes 25 years based on the payments, but let's be realistic. Like that's a lot of money to tie up.
Yeah.
And I just want to look at it as, let's build equity in the home. It's not my forever home. Your first home is most likely not going to be your forever home. So why am I in a rush to pay it off?
I see the attitude in the housing market kind of turning into the car market, where we used to just pay cash for cars and drive them for forever. But the thing is, the value of cars, like, I don't know if it was like 6-7 years ago, I remember like the average new car in Canada was under $40,000. I think it was like 35,000 or something like that. Right now, I believe if it's not high 50s, it's in the 60s. So new cars have gone up 200%. Now you look at all the options that are in them, the heated seats, the CarPlay, whatever.
Yeah.
They have great options, the adaptive cruise, articulating headlights. I understand why they're more money. But a lot of people now are like, well, I'm always going to have a car payment, so it's not necessarily about the length of the lease or the financing term. They're just like, all I really care about is the, monthly cash flow in my household, to your point there. And unfortunately, I see that similarly in the housing market right now, where it's like, well, I'm always going to have a mortgage payment. So it's just,
That's how I look at it. I don't see a point in my life where I don't have a mortgage payment, to be honest.
Now, part of that's because you're an investor also,
Yes.
right? But obviously, at some point, I'm sure you'd like to pay off your primary residence, unless you're using that money to leverage another.
That's probably what I'll be doing,
Yeah.
to be honest.
But if you weren't using it to leverage something else, I'm sure the goal would be, okay, let's get our household expenses down to as little as possible. And so there's probably 2 discussions coming off of that. So one that I'll come back to is using our capital in our house to fund investment property. But the other one would be tips for young people right now to qualify for more mortgage to get into the housing market. What's most important? Is it paying down debt? Is it good credit score? Is it saving up a bigger down payment? Is it finding a co-signer? Like, what advice could you give to a young person right now to help them qualify for a mortgage, and I guess order of importancy?
The biggest thing and the most difficult is income. That's really what affects everything.
Yeah.
As for debt, stay away from car loans and leases if you can.
Because the way you get qualified is your total debt inside the household, which is you and whoever else you're buying the property with. Or if it's just you, then it's, okay, if we have a student loan, a car payment, and a credit card, can we pay down the credit card even if it means less down payment? And because it's all based on monthly cash flow. The government actually doesn't put as much weight on the down payment, right? They're willing to finance more if you have less other obligations.
Yes. So it's the monthly payment that matters. So a car loan, you can't really do anything to get that monthly payment down. Even if, let's say you had a car loan, the balance was 90 grand, you paid it down to 5,000, but now you're still paying $600 a month.
Yeah.
We have to associate that as a payment, a fixed payment.
Yeah.
A credit card, if you go from 20 grand to 5 grand, we're only taking 3% of the balance. So that payment's lower. So car payments affect you the most. Student loans affect you, but not so much. There's some ways around it where you can ask the National Student Loan Services to drop your payment to a minimum.
Okay.
And then that'll help you qualify some more. But we just see car payments affect, like, because unless you sell it or put it in somebody else's name, there's nothing else you can do to avoid it.
I've even heard, like in some scenarios, let's say that someone owes, to your point, they might be at the tail end of their financing obligations. So let's say they owe $15,000 on the car, but they're paying $800 a month. They have 60 grand saved up for a down payment on a house. A lot of mortgage brokers and specialists will just say, pay off the car and only put 40 down on the house.
Yes.
And people will be like, no, how does that make sense? But it's all about the monthly payments, right?
Yeah.
And why not enter home ownership with one less payment, especially because your car loan's probably at 6 or 8 or 9%, and your mortgage rate right now is 4-ish. If you got it in the last month, from an A lender, and I don't want to hook you into anything there because your payment can be anywhere from based off a 4% interest rate up to 12%, depending on your credit worthiness and who the lender is, and even higher than that yet too.
Oh yeah.
Anything that you would want to add to that, like to make yourself a more credit worthy borrower in the bank's eyes?
Well, for first time buyers, one other thing I'll add is that don't be afraid to team up with somebody. There's a lot of people my age that they're single and they're just renting. Yeah. Chances are you have somebody you went to high school with or university that you're friends with or college, and why not team up with them? Let's say you're both making 50 grand. Now it's 100. Buy a duplex and each live in one unit. So I have some friends right now that are renting, and I'm like, you got to team up with, your best friend that's also renting, and you guys buy a place together, and then eventually you go your separate ways. You get paid out in the equity, or you sell it, or whatever. Yeah. And
you got to put qualifications on that, obviously, right? Like we got to agree that we're going to be into it for a similar number of years, so that one of us is not going to take off out west. Or you want to make sure.
Or if somebody gets married and then they move in, and then that person's now obligated to a portion of their equity. So you got to be a little bit careful, but it doesn't hurt to try that option.
No, and sometimes it's relative too, right?
Mm-hmm. Yeah. So that's another big one I'd say. But overall, just make your payments on time. Don't have high utilization on your credit cards. Don't use more than 50% of your total limit or a line of credit. If it's that.
Does it benefit people to actually request a higher limit on their credit card or line of credit? So like, let's say I was carrying a $5,000 balance on my credit card. My limit was 7. Does it make sense to talk to my credit card company and say, raise my limit to 10, please? Just because it's now 50% instead of
it does. It would have been. If you can avoid increasing your balance. Right?
Okay. Yeah. So for if your balance is going to stay the same or lower, great.
But. Yes. But if you don't have the ability to control yourself from using more because now you have access to more, then don't do it.
Yeah. Which makes, I'm not advocating for anybody to carry a balance on their credit card ever. I'm just saying, in theory, what's a practical way to.
Oh, yeah. But you have to have that self-control, right?
Yeah, for sure. No, I know when home equity line of credits came out, it was like a big thing because people are like, it's crazy. Like some of these banks are giving you like a debit card attached to your house's equity, and like you can go buy a boat, right? And it doesn't really affect you today, except all of a sudden you owe 40 grand more on your house, and it's like, oh, I guess I should probably start paying down the boat now. Like, so you have to exercise that self-control just because you have the ability there. Now to transfer that to the investor side of it. That's where a HELOC or a home equity line of credit can be a huge tool, right? So if you have your primary residence and you have a conventional loan, not like a high ratio or CMHC or Genworth, whatever, or it's not Genworth, it's Sagen now. So if you don't have an insured mortgage, usually you can sign up for some type of a mortgage product where you have a home equity line of credit that grows as you make each payment, right?
Yes.
So you pay down the principal on the house, the ability you can borrow against the house grows, and a lot of people are taking that and doing what with it?
They're buying real estate.
Yeah.
I have a lot of clients that are doing that, and they're writing off the interest, right? It's a rental, so they can write off the interest on the line of credit. They can use it as a down payment and then take the cash flow from the rent that they're getting to pay down the line and then reuse that line for another property, right?
Yeah. Now, if I'm qualifying for the loan, obviously whoever is lending me the money against the house, they have to say, okay, Cody, where are you getting the down payment from?
Yeah.
So obviously you have to be truthful about that and say, like, you have to prove where it's coming from. You need 90-day account history, whatever.
Yep.
So if it's coming from the home equity line of credit, they have to account for the extra payment that's going to be in your ability to borrow also.
Yes.
Right?
Yes. So we look at that as if you own your primary residence and you want to buy a rental, we'll look at, is it better to do the line of credit route, or is it better to just pull out cash and have a fixed mortgage?
Yeah.
Because sometimes doing the line of credit can actually hurt you because there's a higher payment that we have to use depending on the two interest rates. Right?
And typically it floats based off prime, whereas the mortgage on the house, you know exactly what your rate's going to be for as long as you lock it in.
Yes.
If you're fixed.
Yep.
Anyways, so maybe for people that didn't follow that fully, if you want to look up Smith maneuver is what a lot of people call it. It's when you use your equity in your house. How are you able to write off the interest on that? CRA makes allocations for that. This is not financial or investing advice. Talk to your accountant. I'll put that in there for you.
Disclaimer, yeah.
Yeah. But what a lot of people do is, okay, well, I'll go buy a house, and then the bank looks at a rental CRA looks at a rental property as a business. Mm-hmm. So Linden might have gone out and bought 123 Main Street, and CRA looks at it as Linden just opened 123 Main Street Inc. is kind of how they look at it. Even though it's not incorporated, let's just say for sake of argument, that's how they look at it. So he's opened this business, and what does it cost him to open this business? Well, his down payment, his land transfer tax, his legal fees, all that kind of stuff. Okay, well, normally when you're opening a business, any costs associated with that can be written off against the income. So now you might have income from that property of $2,000 a month, which is $24,000 a year. But if your costs of interest, land transfer tax, utilities, improvements, whatever, can get anywhere close to that $24,000, even though you have $24,000 in income, you also have $24,000 in expenses to go off against it, and therefore you can write off the costs allocated with that.
And the rental was performing at a deficit, so you don't have to pay any tax.
Yeah. Now the bank also looks at the rental income as additional household income to service the loan too, right? Now they typically don't use all of it, and then different lenders use different ratios.
Yes. So A lenders will use usually 50% of that income. B lenders may use up to 95%. Private lenders don't really care.
Yeah.
So each lender is different, and that's the best part about being on the broker side is that for investors, if it doesn't work at TD, we can try Scotia, we can try BMO, and each lender has a different policy. They're not all the same.
Yep.
So you're able to really structure a deal to work if it doesn't work at one institution.
Yeah. So we've kind of mentioned private a few times, and then your A lenders. What is the range of lenders that you guys are working with as a mortgage broker? So a lot of people think, okay, well, I got a checking account at such and such bank, so I'll go there to get qualified for a loan. What's the additional value add that you can offer as a broker where, you know what, just because this one said no, come see me, I might be able to get you approved with so-and-so. And then obviously your goal is to get them the best product possible. And typically the best product is, it's not always best rate.
No, it's not.
Best rate's a big part of it, but also you want to factor in early cancellation, portability.
Prepayment penalties, everything.
Yep.
So that variety is a big thing. Using a broker versus a bank is variety and the level of service. I don't work banking hours. You need to call me at 9 o'clock at night to put in an offer. I'm going to pick up the phone, right?
Yeah.
But it's that variety that helps the consumers is A, B, and private lending. So we have 117 to be exact lenders that we can work with. BMO, Scotia, TD, WFCU, First National, and then you go into the private space and B lending. So there's a bucket that your deal falls in. It's just whether or not you're willing to pay that interest rate.
Yeah. And then typically the A lenders are going to be whatever Bank of Canada's overnight lending rate is, plus maybe 1.5, and it obviously depends on the credit worthiness. So for I guess sake of illustration, today I think overnight rate's 2.75.
Yes, that's correct.
We're recording this on April 16th. Bank of Canada did not decrease interest rates today as many expected, so it is still 2.75%.
Yeah.
So I guess within that, you add 1.25, that gets you to about 4%. And I think that's a lot of the posted rates that banks are advertising right now. It doesn't mean you'll get it. Obviously, there's a lot of qualifiers that go on that. How would B lenders and private lenders maybe, I guess, vary from that percentage?
So they definitely add a premium. It's usually with the B lender, it's about 0.5 higher than the bank rate, like the bank an A lender's rate. There's more risk involved, but it's also credit score dependent. Yep. Most A lenders, it's not credit score dependent. Most banks wouldn't charge a premium because your credit score is 680 versus 800.
Yeah.
Some do, but with the B lending space, that's an automatic requirement. So
the banks is more about income. How much is coming into the house per month?
Yes. So with the B lender, it's credit score dependent. Higher your credit score, the better your rate's going to be. If it's a rental, there's a premium. If it's a 35-year AM, which you can do with B lenders.
Oh, interesting. Okay.
There's a premium. And then you go into the private space. Private space, they can charge whatever they want.
Yeah.
We've seen
and
privates.
it's often, I shouldn't say usually, it's often double digits, but then also there's an upfront fee many times too.
Yep. So the rate is usually lower on a private loan when the equity in the property is greater. So if it's a 65% loan to value, 65% is the loan secured to a property, the rate might be lower.
Yeah.
If you're going up to 80% loan to value, the rate's probably going to be higher.
Yeah.
If
More
it's a second
risk
mortgage,
for the lender.
Yeah. The more risk, the higher the rate.
Yeah.
At the end of the day. So our goal is, can they get approved with the bank? No. Try a B lender. If they can't with a B lender, then we go to what's called a MIC, mortgage investment company. If they don't qualify there, then we go to a John Doe off the street and say, hey, are you willing to loan it?
Wealthy John Doe.
Wealthy John Doe.
Yeah.
And then they'll charge whatever they're comfortable with. Usually, if you're going to a John Doe and they're accredited, they have the cash to invest, they may charge 15% plus a 4% fee, or they may charge 10.99 plus 3. It's however they want to structure it.
Yep. And you obviously have to agree to it. It really depends on how desperate you are to make it work. And then as a broker, you don't want to see someone stay in that private rate environment for a long period of time. It might be the necessity to make the transaction happen in the moment. But your goal, I would imagine, is to outlay a path where we get you to B and then to A and then, back into this world as far as rates.
Always temporarily, because a private loan, you're paying minimal in interest, maybe a couple $100 a year. That's
Principal.
it. And sorry, principal, yes. Yep. The rest is all interest.
Yep.
So we want them in for 6 months to a year, and we want to graduate them to a B lender, and then from the B to an A.
Yep.
A lot of the private loans it's income based, or it's credit.
Yep.
Or it's a short-term solution before you refi it or fix up the property.
Yeah, which may be a good segue into another thing there too is a BRRRR, which is a pretty popular term that's come out. So BRRRR means two things in the financial world right now. So in the real estate and mortgage world, it's buy, rehab, rent, and then refinance.
Yep.
The other time you hear it is when crypto people are talking about the central banks printing more money, right? The money machine. Brrr. But so what is a BRRRR, and how are people using, I guess, private money and then structuring it into a better deal? How are they, or I guess, why would somebody want to go this route in the first place versus just buying a home that's ready to rent?
Yeah. So we're seeing a lot of that, and it goes private for a few reasons, is the state of the property. If the property's in poor shape, you have to go to a lender that specializes in fix and flips.
Yeah.
So we use Calvert Home Financing, or Calvert Home Mortgage Corporation, I think is what they're called. And they'll offer 6-month fully open terms. They don't care about the state of the property. It's all about what is the ARV, what's going to be the after return value on this home.
Yeah.
And then what's the business plan to fix it up.
Yeah.
And then from there, you refi out of it or you sell it, and that's the route. So
when you see all the flipping TV shows, most of these flippers don't have cash. Just disclaimer: they're borrowing private money, or they're borrowing from a mortgage fund with an ability to pay out or even structure the renos. Typically, even with Calvert, I know if I was renovating the home, the renovations are all on my dime.
Yes.
It's the house that they help with the purchase of. They don't finance the renovations.
With
right?
as little as 20 grand down.
Yeah.
Right. So there's a fee involved. It's 2.5%. And then the interest rate could be as low as 7.99.
Yeah.
It's
all relative to risk.
Yes.
Of course.
And your down payment, lower down payment, higher rate.
Yeah.
But it's a really good product because you can pick up something for 60 grand and there's no floor and they'll finance it. It's just, do you have the ability to do it on your own? Have you done a fix and flip before? Because they'll interview you.
Yeah.
Do you have the capital to complete it? And then can you handle the carrying costs for the 6 months while you fix it up?
Yeah. And so I guess big thing for people that are looking to flip homes or buy something to renovate and then start renting it out or even to live in it. The big thing that you have to factor into that is interest costs in your holding period. Because you can look at it and go, okay, they're asking $180,000 for the house. I think if I fixed it up, it'd be $350,000.
Yeah.
But it's going to need $80,000 in renos, and I can do a lot of that myself. But a lot of people don't factor in what's my cost per month if I'm borrowing private money at 8, 10, 12, 14%. And then what if the renos take longer because my permits were held up for 30 days or 60 days or 90 days? Because the town councilor in it? No, I'm kidding. There's obviously a process with that, right? If you're getting designs done or you're waiting on trades or engineers to get drawings back, whatever, a lot of people don't think to factor in the financing side of it. And when you're borrowing private money, especially at a high loan to value, it can eat up a lot of what your potential profit would be or even bring you into the red instead of the black.
Absolutely. I want to get out of there quick.
Yep. Okay. We've covered a lot of municipal politics, town council talk. We covered a lot of mortgages, I guess from privates to A-lenders, from renovations to first-time home buyers to landlords, how they're using HELOCs, all that kind of stuff. You run a podcast also. Do you want to maybe talk about your podcast a little bit? Give it a bit of a plug?
Yeah, I've been doing that since 2022, right? Not 2022, 2020.
Okay.
When the pandemic started, I was in university, maybe second or third year, and I really enjoyed going to conferences, seeing people speak, learning their story, and I figured, hey, it's on shutdown. I wasn't working at the time. Why not bring that online and interview all of the successful people in Windsor, Essex that somebody may not have the opportunity to have a chat with.
Yep.
So instead, 20 minutes, I have that interview and their story shared, and people can pick up bits and pieces from it and help accelerate their life, right? So I'm at maybe 160 guests, maybe a little higher now.
Oh, wow. Awesome.
So it's every Wednesday we release an episode or try to, and it's completely free to watch. It's a lot of fun, and I meet a lot of people and hear what they're up to.
Cool. Anything else you want to talk about? Floor's yours.
No, I think this was great. I mean, if anyone's looking for advice, if they want to enter the world of politics or they want to enter the mortgage space, I love sharing what I've learned so far. Obviously, I'm quite new to everything and young in my career, but I think I've learned a few things that if it could help you get through that roadblock without actually passing through it, I'd love to do that.
Okay. And then the podcast is Coffee with Crainer?
Coffeewithcrainer.com. Yes.
Okay, cool. Yeah. And where else can people follow you?
Coffeewithcrainer.com, lindencrain.com, counselorcrain.com.
Okay.
Just, I guess Google.
Awesome.
Or anywhere. I try to be everywhere. In the mortgage space and politics, you have to be accessible.
Yeah, for sure. Cool. Well, thanks so much for joining us on the show.
Thank you, Cody.
And hope and trust everybody enjoyed the episode. Thanks.
Bye
for now. Thanks for listening to the show, folks. Please keep in mind that this show is not offering legal, financial, or accounting advice, but rather opinions and experiences in the world of real estate from the host and the guests. If you're enjoying the show, please rate, review, and share with your friends and colleagues. And if you think that there's someone that needs to be on this show, please feel free to connect them with me. Or if there's a topic that should be discussed, feel free to let me know. Thank you so much, and bye for now.